What's up guys, this is Yash. Welcome to this fresh video. I'm gonna put my coffee sign, be right back. In this particular video, what are we talking about? In this particular video, I will be telling you more about working capital loans. And now if you not understand what that really means, I'm gonna tell you more about it. Simple, working capital loans are the quick money that you really need right now to actually have things going on into your business. So if you've been doing business for a little bit now, what would happen normally is Shopify, PayPal, Squarespace, all of these people, they have their own banking and working capital departments. They're like, okay, cool. This person is doing good business based on their track record and based on their sales. There are different options. They're gonna give you different terms, different loan amounts. So they'll be like, okay, you know what? You could take $100,000 from us, and I've gotten that loan before. They're like, hey, I'm Shopify. Hey, on your Shopify page, you're looking at something and there's like, okay, look, there's $100,000 loan option for you. If you want, what you simply gotta do is click on this. We'll check whatever's going on and transfer money to your bank account within 3 days. Sounds really good, right? And on the back end, it's pretty simple and straightforward. Really, there is really not a catch in those loans, and I have dealt with such loans before. But there are some cons and there are some pros that come with such loans, right? There are some traditional loans that you'll go to the bank, have them run your credit, you personally guarantee those loans, and then that's based on your business performance, and the bunch is going on. But in these specific loans, you don't really personally guarantee anything. What simply happens is they look at your previous track record, see the amount of sales, tell you the amount of percentage that you would have to pay every day from every dollar that you make on your sales. Every sales that you make, they're gonna take that certain amount and put it right down into the payment for the loan, and there's gonna be a working capital limit that you have to pay off. So if I'm saying everything is good and perfect, then what is the problem here, and why is this video really here? To make it simple. What has happened to me? It has happened to me before in one of my businesses. I went ahead and got this working capital loan from Shopify for about $44,000. So what it does, I wanted to buy more inventory, and I was like, look, this is gonna be great season. It was probably last year, and I wanted to buy more inventory. And I was like, look, my price is gonna drop significantly, and I can really afford $50,000 worth of inventory right now. But if I was to order $90,000 inventory, my price would slash down. I could get probably 200 pieces more in each design, and that would be great for me, great for business. So what I simply did, I went ahead and clicked on that button, saw what the options were. They're like, okay, so what you gotta do is pay 15% from your daily sales to Shopify. And so if I'm paying $40,000, I have to pay 15% every day from my sales. So if I was doing $100 in sales that day, I would pay $15 towards the working capital loan. If I was doing $200, I'd be paying $30. If I do $1,000, I pay $150. If I do $10,000, I pay $1,500. And it's all towards the loan. It automatically gets taken away from my bank account before it even gets to me. Actually, Shopify has it the other way. What it really does, it'll drop in the money for you and then take the working capital loan as a negative balance from your checking account. So say you did $2,000 in sales. After its fees, it's going to deposit $1,900 something and then deduct the $300 as 15% of payback every day. I got that, and I figured that out. That's pretty simple, right? I could run that, and it's amazing. It's just going to automatically pay myself. I have 60% margin on my product, and I'm be perfect. Remember guys, there's a lot that goes into these loans, and these loans start to take a toll, right? I want to tell you what it really does. Your mindset most of the times would be like, okay, look, every loan that I have a $30,000 loan. I probably paid in about 7 months based on the amount of money that I make, and you could figure that out super simply. I'll put the formula in the description. If you go to the description, it'll tell you how much longer it's going to take based on the percentage that you're paying back every day, right? So how many sales you really got to do. I'm going to put that formula down there for you. It's very simple and laid out together. It's simple math. So if you're actually, first of all, before I jump further into this video, I want to tell you, if you have options from Shopify and PayPal and they both are giving you the working capital opportunities, remember to go through and see what are the flat fees. You really need to know what those flat fees are. There's going to be one-time fee that you have to pay for the whole working capital loan. So if I'm going to take $30,000 from Shopify, I might have to give them $33,000 back. Whereas if I was taking $30,000 from PayPal, the flat fees is significantly lower, and I don't know why. Was it the case with just me? I'm not pretty sure, but it really is most of the times lower. I've seen with 6 other people, and it is lower compared to any other form. And with PayPal, if you're taking $30,000, you would just have to return like $1,500 more. So it's like about about 50% cheaper than Shopify on the flat fees, which is amazing. But on Shopify, you could be paying like 10%, 15%, or less than that. Whereas for PayPal, you'll be paying upwards of 10, 15, 20, even 30% per sale. So what happened for me was I'm like, okay, I like this loan option that is given to me by PayPal. It is amazing. I have significant amount of sales on PayPal, more than $1 million in sales. So I am pretty good on that. So I got a $40,000 offer. I believe it was $40,000 offer, and I clicked on it and I was like, okay, money was sent to my account. I transferred it correctly, quickly, and got my inventory like how I discussed before. What happened? Now, every time I got a sale on PayPal, it took 30% of the margin and took it and kept it there. And then when you're selling products, you have returns and refunds. Say you came to my store and bought this t-shirt for $10. You give me $10, PayPal's gonna keep $3 and take their fees afterwards and give me $6 something, right? I keep that dollar, and say tomorrow you return this shirt and I have to give you this shirt money back for this shirt. You're not gonna be satisfied with $6 and some cents. You would need all your $10 back. So if we give you $10 back, where do I stand? I'm negative $3 at this point. And that was a big game changer for me. So remember guys, if you deal with products that have a bunch of returns, or you deal with products that you offer free returns or stuff, then this could take a big toll on your store. Remember, this is very important. So most of the times you'll be like, okay, look, I have about 30 or 40% margin, but those 30-40% margins only are there because they send you the stuff back, you send them the money back, you have the same product to sell again, and minus the marketing budget, whatever, you still are positive. But what happens when someone sends you some stuff back and you have paid off that 30% or 15% or whatever percentage it is? That's the negative balance that you accumulate, and that could really slowly but take toll on you, and that is very important to know. That being said, what is the next thing? Why I recommend PayPal loans over Shopify loans? Consider this example like this. Shopify is more like an umbrella, right? If someone comes to your store and buys something from you, what happens? They are here. They would either finish a payment using a credit card, or they would finish it paying through PayPal. So if they were finishing it using credit card, if you were using Shopify to pay the loans back, what would happen? Shopify would be like, okay, 13% for any sale that happens. Pay credit cards or PayPal, it doesn't matter. So $100 sales at your Shopify store would be about 13% or whatever percent negative, and boom, they take the money. Now, whereas if you have PayPal loan, what it really does, you have a $100 sale, you have a $100 sale at credit cards, you get to keep all of that. If it's not PayPal, they're not going to take any money. If you had a $200 sale, $100 went without any deductions because they were on your credit card, and the other $100 that were actually done through PayPal, they got a 30% deduction. So it's not on their total sale, it's on the PayPal sales that happen through PayPal, which is amazing and helps you better if you have 50-50 or 60-40s. Then you're actually saving money as well, not really quickly paying that off. That gives you more time, buys you more time. That is part of it as well. So remember this concept as well here. But remember, if you were to do Shopify loan and then you were to be like, okay, I need more stuff, and you get a PayPal loan, you could be in deep danger. You'll be playing on like some dangerous grounds here, because I have done that mistake. I was like, okay, I need more loan, and I was growing the company really fast, and I kind of didn't think about going the regular route, because I didn't want to really go to the bank, form lines, talk to the financial advisor and stuff. I could have done that, which I actually eventually did and got out of all of this. But what happened, I got a Shopify loan. I had a Shopify loan, and I got an offer from PayPal. Like, hey, you could get another $50,000, or I had $30,000, I got another offer here. So I had a Shopify loan that was about done paying, and then I got another loan from PayPal. So what happened? I was paying the top front. As soon as a customer comes and makes a sale, I was paying 13% off the mark right here. Then I was paying 30% when someone buys from PayPal. So I was paying about 43% every time someone was making $1. And what are your margins? Your margins are not 100% or 500%. You're probably buying a $2 product and it's selling for $4 or $6. That's about 40, 50, 60, 70% to the max. So remember, this could be a real game changer, and it could actually flip back on you. So first of all, if you do not have to take a loan, my personal advice, if you do not have to take a loan, if you do not need to take a loan, don't take a loan. Don't do it. I've done that a lot of times and got myself into I cannot use that word, but got myself into crap, and it happens a lot of times. Don't take a loan if you don't need to take it. Don't take risks which are crazy, take risks which are educated. I do recommend taking risks. Risks are very important to succeed in life because business is all about risks, right? Second, if you're taking a loan, remember what your terms are, see what is a flat fee, divide the exact fees by the loan and times it by hundreds, and you'll understand what is a percentage of flat fees that you're paying. What is a tactual simple interest they're charging you? Compare your options and see. Don't mind picking up the phone and calling your bank and be like, okay, what do I do? What are my personal guarantees? How does it work? Because anyways, you'll actually have to pay those loans back, regardless of what it is. So that is more about the gist of this video. And if you like this video, do consider hitting the like button because that means the world to me, and that would be a great thing because I really take effort in making these videos and make me very proud when you watch it. So thank you for watching it. And while you're hitting the like button, if you like videos like this on business, marketing, and finance and stuff like this, and doing different things with your money and your business, go ahead and hit the subscribe button so you get a video. Every time I post a video, you get notified, and hit the notification bell because then you would really know when I post a video. And then there are different videos on the side that you could click right now and watch them. Thank you so much. Take care of yourself. And if you have any other questions, leave it in the comment section. We go over it. Take care and peace. Bye-bye.